It just happened. Yesterday, Donald Trump and Xi Jinping sat across from each other in Beijing's Great Hall of the People for the first time in 9 years and made decisions that will reshape global markets for the rest of 2026 and beyond. And here is the thing. While most investors are waking up this morning reading vague headlines about constructive dialogue and strengthened bilateral ties, I am going to show you exactly what was actually agreed, what it actually means for your portfolio, and which specific stocks are about to move because of what happened in that room. Because buried inside yesterday's summit readouts are 4 developments that the mainstream media is either underreporting or completely missing. Development 1, the US government, reportedly within hours of Trump and Xi shaking hands, cleared Nvidia to sell its H200 AI chips to Alibaba, Tencent, ByteDance, and JD.com. That is a historic reversal of policy that directly affects the global AI race. Development 2, Xi told Trump directly that Taiwan is the most important issue in US-China relations and that mishandling it could lead to clashes and even conflicts between the two countries. That is the sharpest public warning Xi has ever delivered to a sitting American president. Development 3, both leaders agreed for the first time that the Strait of Hormuz must remain open, and China expressed interest in buying US oil to reduce its dependence on Middle Eastern crude. That is a direct signal about the Iran war. Development 4, Harvard professor Graham Allison, the man who invented the concept of the Thucydides trap, said on live television that he expects the two countries to announce what could amount to a $1 trillion commitment, in Chinese purchases of American goods. $1 trillion in announced purchases from a single summit. That is not background noise, that is a market, moving earthquake. And I am breaking down every piece of it for you right now. Subscribe if you are new, and let's get into it. Let me start with what we actually know happened. Not the spin, not the PR, but the actual documented outcomes from both the White House readout and Beijing's official communique, the setting. Trump arrived in Beijing on May 13th. Xi welcomed him at the steps of the Great Hall of the People, an unusually warm public greeting for a relationship that spent most of the past 2 years in open economic warfare. They shook hands in front of cameras. They toured the Temple of Heaven together. They sat down for a state banquet. This staging matters. Xi doesn't do elaborate public welcomes for leaders. He considers adversaries. The optics were deliberately warm, a signal that Beijing wanted this summit to succeed. The official framing, according to Beijing's official English readout, both leaders agreed to build a constructive China-US relationship of strategic stability, a framework intended to guide the relationship for the next 3 years and beyond. That phrase, strategic stability, is diplomatic language for, we're not going to let this relationship blow up again, the way it did when tariffs hit 145%. Both sides have agreed implicitly to manage competition rather than all-out economic war. Harvard's Graham Allison, the scholar who coined the term Thucydides trap to describe how rising and ruling powers tend to go to war, went on CNBC and said he expects the trade truce from last year's South Korea summit to become a formal agreement. His words? The big word will be stabilization. The business delegation, Trump arrived with a delegation that maps precisely onto the summit, is commercial agenda Elon Musk, Tim Cook, Jensen Huang, who boarded Air Force One in Anchorage after Trump called him personally when news broke that the Nvidia CEO was not on the original invite list, Kelly Ortberg from Boeing, Larry Fink from BlackRock, CEOs from Goldman Sachs, Citi, MasterCard, Visa, Meta, Qualcomm, and Micron. Wedbush Securities analyst Dan Ives put it precisely, what is at stake is not just one trip or one headline, but the direction of AI supply chains, the shape of future export controls, and the degree to which US chip leadership remains monetizable in China. That sentence is the key to understanding this entire summit. The opening gambit from Xi before any trade deal was announced, Xi made his most important move of the summit. He asked Trump publicly, can the US and China avoid the Thucydides trap? Can two great powers, one rising, one established, find a way to coexist without going to war? And then, in the same breath, he issued the sharpest warning Beijing has ever delivered publicly to a sitting American president about Taiwan. Handle it well, the relationship holds. Handle it badly, the two countries risk collision or conflict. Not tensions. Not complications. collision, or conflict. Xi was making the stakes explicit before a single trade deal was signed. This is a man who is confident, who believes, as he has told his own officials, that the East is rising and the West is declining, and who wants Trump to understand the full weight of what is on the table. This is the story that I believe will have the longest, lasting impact on global markets. And it broke so quickly, reportedly within hours of Trump and Xi's handshake, that most investors haven't fully processed what it means. That line asterisk Reuters reported, citing 3 people familiar with the matter, that Washington cleared sales of Nvidia's H200 AI chips to approximately 10 major Chinese technology firms. The companies named include Alibaba, Tencent, ByteDance, and JD.com. Let me put that in context. The history of this decision, in April 2025, the US banned Nvidia's H20 chip, a capability-limited version that Nvidia had specifically engineered to comply with export rules from Chinese sales. That ban cost Nvidia a $5.5 billion inventory write-down in a single quarter. The Trump administration reversed that ban in July 2025, permitting H20 sales again. Then in December 2025, they went further, licensing the more advanced H200 chip for China. Now, in the immediate aftermath of the Trump-Xi meeting, that H200 clearance appears to be expanding, with specific named Chinese companies authorized to purchase. Feiwei, this is seismic, asterisk. Asterisk, the H200 is not a consumer chip, it is one of the most powerful AI training chips that exists. It is the chip that Chinese tech giants Alibaba, Tencent, ByteDance desperately need to compete in the global AI race. Barclays China Internet analyst Zhang Xiao put it plainly, the most important competitive arena today, especially between us and China, is in AI, and the greatest bottleneck today in AI is compute. The secret weapon, or not? So secret weapon for us AI players is access to the Nvidia chips, which Chinese companies don't have. Having access to Nvidia's latest chips is very, very critical for the Chinese players to compete on a global stage. If Chinese companies can now buy H200 chips, several things happen simultaneously. For Nvidia, a market that was assumed to be zero revenue, Nvidia's own financial models assumed zero China sales, suddenly has massive potential. Scott Ladner of Horizon Investments noted that Nvidia's outlook assumes zero China sales, meaning a material change could possibly alter demand expectations for the broader chip industry. Alibaba, Tencent, ByteDance, and JD.com alone represent potential demand for thousands of H200 units, each unit costing tens of thousands of dollars. We're talking about billions in potential new revenue for Nvidia, on top of already record earnings. For the AI race, China's AI companies suddenly have access to compute they've been denied for over a year, that accelerates their development timelines. The gap between us and Chinese AI capability narrows, or at minimum, the rate of narrowing accelerates. For global semiconductor stocks, if H200 chips are flowing to China, Micron's memory chips, which go into AI servers alongside Nvidia's GPUs, also get a demand boost. Qualcomm's Chinese business stabilizes. The entire semiconductor sector gets a China tailwind it didn't have 48 hours ago. Faithy complication. Not everyone in Washington is celebrating this decision. Heidi Krebo, Rediker at the Council on Foreign Relations, called Nvidia licensing deal politically explosive, warning it could trigger a fierce backlash from China hawks in Congress, led by figures like Secretary of State Marco Rubio. And there is a paradox buried in the China side of this equation. Some analysts note that when the US has previously allowed certain Nvidia chips into China, Beijing's response has sometimes been to say, no thanks, because China is trying to build its own domestic chip industry led by Huawei, Alibaba chip division, and ByteDance, and doesn't want its companies dependent on American technology. The real test will be whether Chinese companies actually place the orders. If they do, this is a massive Nvidia catalyst. If they don't, if Beijing pressures its companies to buy domestic instead, the announcement is more symbolic than financial. Watch Nvidia's earnings on May 20, just 6 days from now. Jensen Huang will almost certainly be asked about this development on the earnings call. His answer will tell you how real this revenue opportunity is. Drop a comment right now, one word, bullish or bearish on Nvidia after this summit. That is it. One word, I read every comment on this channel and I'll personally respond to as many of you as I can today. Now let me talk about the development that will have the slowest but potentially the most consequential impact on global markets. Xi Jinping's Taiwan warning, Here is what she said, according to Xinhua, China's state news agency. After the first round of bilateral talks, the Taiwan question is the most important issue in China-US relations. Taiwan independence and peace in the Taiwan Strait are as irreconcilable as fire and water. Handle it well, the relationship holds. Handle it badly, the two countries risk collision or conflict. I want to walk through each of those sentences because each one carries specific weight. Asterisk, the most important issue in China-US relations asterisk, Xi is explicitly telling Trump that trade, Iran, rare earths, AI chips, all of that is secondary to Taiwan. Before any deal is signed, before any Boeing order is announced, Xi is establishing a hierarchy. Taiwan is at the top. Asterisks, fire and water asterisk. This is not diplomatic language. This is absolute language. Xi is telling Trump there is no middle ground on Taiwan independence. Zero ambiguity. If Taiwan moves toward formal independence, China will respond militarily. That is the clear implication. Asterisk collision or conflict asterisk. The fact that Xi used these words publicly in a formal readout during a state summit is remarkable. Xi rarely makes explicit military threats in formal diplomatic settings. The fact that he chose to do so here, on the most watched diplomatic stage of the year, tells you how seriously Beijing views this issue. Now, here is why this matters for investors, and I want to be very specific about the mechanism. Taiwan is home to TSMC, Taiwan Semiconductor Manufacturing Company. TSMC manufactures approximately 90% of the world's most advanced semiconductors. Every Nvidia GPU, every Apple iPhone processor, every AMD data center chip, virtually every cutting-edge piece of computing hardware on Earth runs through TSMC's fabs in Taiwan. The market currently applies what analysts call a Taiwan risk premium to TSMC stock, a discount to the company's fundamental value because of the risk that military conflict could disrupt its operations. That premium has been relatively stable because investors generally believe the U.S. commitment to Taiwan security is rock solid. If that commitment softens, if Xi's language in Beijing signals that the U.S. and China are in some form of negotiation over Taiwan's status, the Taiwan risk premium expands. TSMC's stock reprices lower, and because TSMC's chips go into every major tech company's products, the risk repricing doesn't stay contained to one stock. Here's the question investors need to ask. Did Trump make any concessions on Taiwan in exchange for the Nvidia chip deal? We don't know yet. The full details of what was discussed privately won't be public for weeks, possibly months. But the sequencing is suspicious. Within hours of the Trump-Xi meeting, the Nvidia H200 clearance was reported. Xi made the strongest public Taiwan statement of his career. These two events happening simultaneously: 1. A major U.S. concession on chips, 1. A major Chinese demand on Taiwan, is not coincidence. Watch what the State Department says about Taiwan in the days following this summit. Watch whether the long-delayed U.S. arms sale to Taiwan gets announced or remains on hold. Those signals will tell you whether Xi's leverage worked and whether the Taiwan risk premium should expand. No, let's talk about oil. Because while the Nvidia story dominated the tech headlines and the Taiwan warning dominated the geopolitical headlines, the Iran development out of this summit may be the one with the most immediate impact on everyday Americans, and on the broadest range of stocks. What was agreed? Both Trump and Xi agreed that the Strait of Hormuz must remain open to restore energy flows through the critical waterway. Xi also reiterated Beijing's opposition to the militarization of the energy artery and any effort to charge a toll for its use. And critically, China expressed interest in purchasing U.S. oil to reduce its dependence on Middle Eastern crude. What this actually means, Let's unpack these 3 points carefully. The joint agreement that the strait must remain open is the first time the U.S. and China have put out a unified statement about the Strait of Hormuz since the conflict began. That matters diplomatically. It gives China a stated position it can use when talking to Iran. We agreed with the U.S. that the strait must be open and you need to cooperate. Xi's opposition to militarization and charging a toll is a direct reference to the ongoing U.S. naval blockade of Iranian ports and the disruption to oil flows. Beijing is essentially telling Washington, we agree the strait should be open, but we also object to how you are keeping it closed. That is a nuanced position, not a full endorsement of U.S. strategy. The Chinese interest in buying us oil is the most market-relevant development. If China starts purchasing significant volumes of U.S. crude, LNG, WTI, several things happen. U.S. energy producers benefit directly. Global oil market dynamics shift as Chinese demand partially redirects away from Iranian and Middle Eastern sources. And politically, it reduces China's dependence on the same supply routes that the war has disrupted, giving Beijing less incentive to maintain its close relationship with Tehran. Does this mean the Iran war is ending? Asterisk, not yet. Analysts at the Center for Strategic and International Studies noted that a breakthrough is unlikely to emerge from the Beijing talks, and that Beijing has shied away from committing to making concrete efforts to end the war. Former Indian ambassador to China Gautam Bambawale said pointedly, "There is only so much that China can do, and not more." But the joint Hormuz statement is a meaningful step. It is the first time China has publicly aligned with the U.S. position that the waterway must be open. If Beijing uses that position in its next conversation with Tehran, it adds diplomatic weight that the U.S. alone cannot bring to the table. For the oil market reaction, oil traders are watching this closely. If the Hormuz agreement is seen as a genuine step toward eventual Iran resolution, even a small step, oil prices could ease 5 to 10% from current levels. That would ripple through the entire inflation picture, giving the Fed more flexibility and providing relief to consumers paying $4.5 a gallon. If the statement is seen as symbolic, nice words, without actionable Chinese commitment to pressure Iran, oil stays where it is, and the inflation headwind continues. This is a meaningful but insufficient step. Watch oil prices this week for the market's verdict. Now, let's talk about the headline number that Trump will almost certainly tout when he lands back in Washington. Harvard's Graham Allison said on CNBC he would not be surprised if Trump announced that China will buy an additional $1 trillion in American goods, including a big buy of Boeing aircraft, soybeans, beef, and semiconductors. $1 trillion. If that number gets announced, every financial headline in the world leads with it. Stock markets globally rally. Trump declares it the greatest trade deal in history. The Dow adds 500 points. But I want to give you the framework to evaluate whether that number is real, because in 2017, China announced $250 billion in deals at Trump's first Beijing summit, and virtually none of it materialized. How to evaluate the Boeing deal specifically? China's airlines. Air China, China Eastern, China Southern are some of the world's largest and fastest growing. They need aircraft. The question is always whether a purchase announcement is a binding order or a headline. Generating moat. A real Boeing deal has specific airlines named, specific aircraft models and quantities, realistic delivery timelines tied to Boeing's production schedule, and financing terms that make commercial sense. A fake Boeing deal has vague language like intention to purchase, memorandum of understanding to explore, or a headline number that includes orders already in the pipeline being relabeled as new. The prediction markets had priced a Boeing deal at 86% probability going into the summit. If the deal gets announced today, watch the final print within 24 hours. That is when analysts will determine whether it is real money or a photo opportunity. Faithy agricultural component. Chinese purchases of soybeans, corn, beef, and LNG are among the most likely concrete deliverables from this summit. These are politically easy for both sides. They reduce the trade deficit Trump is focused on, they give China food security and energy supply, and they don't touch the sensitive tech issues. Stocks to watch if large agricultural purchases are confirmed: Archer, Daniels, Midland, Adem, Bunge Global, BG Corteva, and Deere & Company D. These names have been in holding patterns. A credible purchase commitment could be the catalyst they've been waiting for. Faith a tariff framework. The 2025 South Korea truce set tariffs at 47% on Chinese goods. The expectation heading into this summit was that those tariffs would be formalized or potentially reduced further. Any tariff reduction, even from 47 to 40% on specific categories, is a positive for consumer prices and for companies with significant Chinese manufacturing exposure, particularly Apple. Board of Trade and Board of Investment. Both sides were expected to announce new permanent dialogue mechanisms, a Board of Trade and a parallel Board of Investment. These are institutional frameworks that formalize the relationship and make another catastrophic tariff escalation less likely by creating bureaucratic channels for managing disputes before they become trade wars. This is actually one of the most durable outcomes of a summit like this. Not the headline numbers, but the institutional infrastructure that prevents the next crisis. If these boards are announced and actually staffed, it is a meaningful long-term positive for us. China business relations. Let me give you the specific market signals I am watching in the next 72 hours as the summit details become clear. Phase signal number 1, Nvidia price action. Most important asterisk Nvidia reports, earnings on May 26 days from now. The H200 China clearance is a potential multi-billion-dollar revenue catalyst. But Goldman Sachs already expects a beat and raise quarter, meaning the bar for stock outperformance was already high before this development. The question is whether the China development pushes the earnings beat from good to extraordinary. If Jensen Huang confirms on the May 20 earnings call that H200 demand from Chinese companies is real and substantial, Nvidia could push significantly higher from already elevated levels. The stock was up 1.9% on Wednesday just on the news that Huang joined the delegation. Watch whether Chinese tech companies Alibaba, Tencent, ByteDance announce large-scale Nvidia orders in the days following the summit. That is the real money confirmation of whether the chip deal is substantive. Phase signal number 2, oil price direction. The Hormuz agreement is on the table. The direction of oil prices over the next 72 hours will tell you whether the market believes it is meaningful. If oil drops 3% or more, crossing below $95, the market is pricing in genuine hope for Iran progress. That is the signal to start thinking about rotation, reducing energy exposure, increasing consumer discretionary, watching airline stocks. If oil stays above $98 to $100 despite the summit language, the market is saying it doesn't believe the Hormuz statement changes anything on the ground. Status quo continues. Signal number 3. Chinese tech stocks, Alibaba, Tencent, JD.com, and ByteDance, accessible through various vehicles, are the most directly affected by the Nvidia H200 clearance. If Chinese tech stocks surge today, particularly in Hong Kong's Hang Seng Tech Index, that is the market pricing in accelerating AI development in China on the back of the chip access. Barclays' Zhong Xiao noted that global investors continue piling into AI-related trades, particularly in South Korea and Taiwan, and the China tech rally could expand that trend. Signal number 4, Boeing. Asterisk, the moment a specific Boeing order number is announced, with airlines named Boeing stock moves, at 86% probability priced in, the move on confirmation might be muted already priced in. The bigger move would be if the deal exceeds expectations significantly, or if it comes in below the triple-digit billions. That Wolf Research suggested Trump was targeting. For signal number 5, TSMC and Taiwan. Watch TSMC's US-listed shares TSM closely. If the stock sells off despite a generally positive summit tone, it may be pricing in Xi's Taiwan warning and the implied weakening of US commitment to Taiwan security. A TSMC sell-off in this environment would be a significant signal that institutional investors are expanding the Taiwan risk premium. Let me zoom all the way out. This summit did not resolve any of the 4 major issues on the agenda. The Taiwan dispute is ongoing. Iran is ongoing. The rare earth standoff is not fully resolved. The chip export control architecture is being modified but remains fundamentally intact. What this summit did was establish a framework, a language, or a set of institutional mechanisms for managing those disputes without catastrophic escalation. Strategic stability. That is the phrase that will define us-China relations for the next 3 years. Not friendship, not alliance. Strategic stability. For investors. That means 2 things. First, the tail risk of all-out economic war has decreased. The scenario where tariffs go back to 140%, where rare earth supplies are completely cut off, where the entire global economy is forced to choose sides. That scenario is now less likely. Markets hated the uncertainty of that scenario. The reduction in tail risk is a genuine positive second. The structural competition continues. China is still building its own chip industry. The US is still trying to maintain technological superiority. The AI arms race is still happening. The Taiwan dispute is still unresolved. These are multi-decade competitions that a 2-day summit cannot settle. The world that QCOM of Beijing is not a world of us-China harmony. It is a world of managed rivalry, 2 superpowers that have agreed, For now, to compete without going to war, for investors, managed rivalry is actually a pretty good environment. It means the global supply chains that power corporate earnings can continue functioning. It means trade flows are not completely disrupted. It means both economies can grow, even if they're growing in competition with each other. The risk is that managed becomes unmanaged, that a Taiwan incident, an Iran escalation, a tech dispute, spirals beyond what the new institutional framework can contain. That tail risk hasn't disappeared, it has just been pushed further out. Your job as an investor is to benefit from the base case, managed rivalry, continued AI growth, slowly normalizing energy markets. While staying protected against the tail risk, that means staying diversified. That means understanding what your portfolio is actually exposed to. And that means watching the 5 signals I just gave you: Nvidia, oil, Chinese tech, Boeing, and TSMC, for the market's real verdict on what happened in Beijing. Let me bring it all home. Here is what you need to remember from today. Faithy Nvidia H200 deal is the most immediately market-relevant outcome. Chinese companies can buy the chips, whether they actually do, and whether that revenue shows up in Nvidia's May 20 earnings, is the next big signal to watch. Faithy's Taiwan warning is the most consequential long-term risk. The strongest public statement Beijing has ever made to a sitting American president. Watch TSMC, watch us arms sales to Taiwan, watch the fine print of any joint communique Fei language. Faithy Hormuz agreement is a step, not a solution. Oil direction in the next 72 hours tells you whether the market believes it. Faithy trade numbers will be big. Verify before you trust them. Whether it is $500 billion or $1 trillion, go find the specifics before you trade on the headline. Strategic stability is the new normal. Not peace, not war. Managed rivalry position accordingly. Now here is what I need from you. We have published 6 videos in 6 days. 6 videos breaking down the biggest market events of 2026 in real time, and we are building this community from absolute zero. The only way this channel grows, the only way I can keep bringing you this level of real-time analysis, is if you tell YouTube it is worth distributing. First, hit the like button right now. 1 click, 1 second. If this video gave you one data point you didn't have before, that like tells the algorithm to show this content to more investors who need it. Do it now. Comment below with this. Give me your honest verdict on the summit. Fei win, lose, or draw for America. 3 choices. Pick one. I am reading every comment today, and I will personally respond to as many as I can. Fei third, subscribe. Because Trump and Xi finished their final session today, Friday, and the announcements are coming. When the Boeing number drops, when the tariff framework is confirmed, when the joint statement is released, I am going to be back immediately with the breakdown. You don't want to miss that video. Subscribe now, so YouTube actually sends it to you. This is Wall Street Alpha Analyst. See you when the final announcements drop.